Hey guys, in case you are wondering if there is always something negative in the way of a trade, well, this is unavoidable. The biggest thing you have to learn as a trader is understanding that the market isn't perfect, and we try to learn how to trade in an imperfect, noisy market. So as price action traders, we try to put structure on an imperfect market to guide our analysis. If you try to always wait for the perfect trade, you will often miss a lot of high-quality trades. What you do when analyzing a trade is to list the high-quality traits in your mind and ask yourself questions like, is there a key level? What is the quality of the key level? Did we just break a trend line? Fresh trend? Is there an area of confluence? How many traits are stacked at it? Is there a chart pattern in play? Is there a trend line in play? Is there a moving average that is in play? Is there a Fibonacci level in play? And the more things you have that are high-quality traits, the higher the trade quality of the trade opportunity and the higher the probability that it will go in your favor with true momentum. And so what you do is you weigh the PRO traits against the negative traits, and if the pros outweigh the cons, take the trade, because there will always be some negatives. You cannot avoid this, but overall your edge will play out in your favor if you know how to identify and stack pro traits. So in this video, we will be going through the price action concept of qualifying a trade through weighing its pros against its cons. You should already know by now that price action is not done holy grail method. We guage. The quality of a trade is if the pros are with the cons and we have a niche, then we take a trade. Now the concept of price action is trying to find structure in an imperfect market. So let's get right into it. So you notice price comes up, hit, and then change directions, making this a level of resistance. Now as price come up again, you notice this long wick candle with a bearish body. Then you think to yourself, this could be a great short trade. And now this is where we qualify a trade to weigh its pros against its cons. Starting with the pros, we have one decent long quick candle, rejecting resistance, and that is all about it. Now what do we have as cons, as things working against us? We have this nasty candle approaching this level of resistance, showing a heavy bullish present, but also a bigger issue is that you will be trading right into this level of support here. Notice all the rejections? What this means is that you are trading into a level where price will potentially bounce from. Again, we always want probability on our side. As you can see, price came down, then bounced up, then came down again before finally right though upwards. Look at how Tiger cons away the pros in this situation. So moving forward, as price moves up, we notice this level and E draw it in. So as a reminder, when price comes up to this level, we have no idea whether it will bounce or not. We wait for price action to present itself. You wait for the market to show its hand. Again, we want to weigh the pros against the cons. What we have as pros is that the candles are shrinking at they approach this level. We have a big candle followed by a smaller candle and then an even smaller candle where the wick is rejecting resistance. And then we also have multiple candles reflecting this level. And as you can see, look at all the wicks sticking out. Once we saw this, then this pair became of interest to us. Let's jump to the daily time frame to show you what we saw. So after knowing what the week was showing us here on a daily time frame, once this place broke down, then we start looking for trade entry short. We then, at this great pullback to reject this broken bottom with long wick candle, this is where we take our trade entry. And with this momentum candle here, we know where the pressure is coming from because of the weekly bearish price action. So let's go back to the weekly and move to the next one. Price comes down to this level. There is clearly no entry as there is no price action and nothing to show us that there is anything possible at this area. Now let's come down to this level where the pros are against the cons. What we don't like is this massive momentum candle as it approaches this level of support. But now look at the pros we have on our side. We have a long wick candle followed by an even better long wick candle, both rejecting this level of support and also rejecting the 50 EMA. Look at how the pros outweighed the cons. Once we have confirmation on the daily time frame, we start looking for entries long. So here we are on weekly. As you can see how we had this long wick candle rejecting resistance in the previous week. So if you remember from one of our lessons, we talked about always looking at where price is coming from. What we did not like about going short on this pair is the fact that a lot of traders just entered fresh long positions right here, meaning there was a lot of buyers entering the market and might not all close at this level of resistance. Remember that trading is a waiting game and you want probability on your side. Taking more trades does not mean more profits. It's ace if you take more losses. Either ways aren't making you a winner.